Hi friends, good evening. Let us try and understand what has happened in today's Bank Nifty 5 minutes chart. As we predicted yesterday, there are some strong sellers at this zone who try to push the market down, and that is extended with this strong uh, candle here. It's a pressure bar with a small buyers. Though buyers try to push the market, it has been hammered down with the pressure of sellers, and followed by it we have a few pressure bars which indicated that market is going in the uh, fall direction, and following that statement the market has fallen down, and thereafter market has displayed a traveling motion. Now we don't know how market is going to behave when price is at this level. Okay, this is the green zone which I have marked here, which is earlier a demand zone where buyers have created all the market upside. Now once it is crashed down, the same buying zone may act as supply zone. So when price is at this level, let me mark it with a rectangle here. When price is in this area, we don't know what is going to happen. So it's always it is always of paramount importance to observe what is happening and then take appropriate decision. As you can see here, you can clearly see that there's some strong selling pressure, and immediately after the market has crashed this demand zone, that turns into a supply zone, and that is proven in these two candles, because once candle reaches this level they are not able to break it, and then market has fallen down. Now market has fallen down, and again you can see some strong selling pressure, and yet market has been pumped up. So this indicates that there are some market makers who have entered the market without any disruption to the normal flow. It is still a standard traveling motion, and without disruption you can see that it has been pumped down. It has been pumped down once, pulled up, pumped down once again, and then pulled up. So this indicates that there are some strong market makers that have entered this market at this level. Now we need to align ourselves in the direction of market makers. So which one is the right way? Let us see what is happening here. Now this low once has been washed out, this rendered a solid structure in the upward market, and once the pressure again reached this point, the same sellers have appeared with a strong bearish candle. Now we don't know if this supply zone, I mean demand zone, has been turned into a pure supply zone, or if market makers who have entered this market would want to try and pull the market upside. So we need to observe what is going to happen. To do that, once this zone is reached, it created a fractal bar, and that's when we can enter the market with a small stop loss uh, and with some line work. To make it clear, I would like to remove these lines for better visibility, and using a modified skiff pitch work we can draw some lines indicating that how price has traveled. Now as you can see, price almost reached this midpoint in a traveling motion and then created a fractal bar. Now this is an indication that market can be enter here with a small stop loss here, and at the same time when market has entered this zone, we entered a short call with a stop loss here. This is the game of playing on either sides, because we don't know which player is going to be dominant at this level, sellers from this level or buyers from this level. So as per game theory, at least one of them will win with major victory. So even if we book a small stop loss here, that can be covered with a large volume of buy trade that we have taken in the upward direction. So we have taken both long and short positions, and as you can see with the strong bullish candle, that selling trade has been triggered stop loss. However, once this zone is broken, the demand zone again has appeared with some strong wicks touching that line, testing that line, and then price has pumped up. So this is how we have to enter trade if you are unaware of situations. Now why did price stop at this level, and why someone should not trade in this zone? Let us have a look at it. Now this is the pressure zone that is created because this is the area where sellers have clearly dominated buyers earlier. So once pressure reached the zone, we will try to understand how candlestick patterns are forming. As you can see, price reached this level and then it has spiked at that level but did not close above it, and every time price touches this level it is creating a strong selling momentum. So that is when we can enter a short position when price reach inside frequency of this solid market structure indicated with this high. So once price reaches this inward frequency and then created uh, a strong bearish candle, that is when we enter the target with a stop loss here, because this is the high that is manipulated and this is the manipulated high. With a stop loss here we enter the market and this is how we exit. So how do we confirm this with some line work? Let us try and understand. Once price has created this low, or we can do some line work. This is the high that is manipulated, this is the low following following the high. So we try to connect these lines here, and sorry guys, so and then extrapolate that line to the latest high. As you can see, the latest high has been already tested and proven, and it again got tested at the inward frequency level. So this is when we can assume a short trade. Now this buy zone doesn't matter anymore. I mean supply demand zone doesn't matter anymore because price is oscillating between that zone. It is not taking it as a support or resistance. So we should not think much about it. Now entering a short position, this is the stop loss and this is the target. How do we assume the target? Well, uh, for for simplicity's sake, we can just assume that this bottom low, this is a price vector that is created and is manipulated, and if these sellers are strong, they will certainly want to come down below this level, and this is our target. And that is how we analyze price and enter trades. So this is it, guys, and hope you have got some better insights of this trading. If you are interested to understand these advanced price action techniques, please do ping me out, and I can help you out with better knowledge and have better interpretation of market by your own ways. Thank you.